So today we're going to go over how I'm 85 for 86 on my last 86 trades. We do have one that we're currently rolling and have been rolling for about a month now. We're upside down a few $100s per contract on that, but the hedges have been keeping us afloat overall. And, that's part of trading with an expectancy. Here's our set list we're going to go over today. Also, before we get into this one, I really appreciate all the YouTube support. If you guys could leave a like before we jump in, I'd really appreciate that as well. Hopping back over here, though, on the checklist, a couple major ES supports that we have are 4430 and 4400. The SPX today, if we hop over here, got down to 4420. So right there, that support at 4430 is holding on the ES. Really two solid bounces off that level. The S&P has fallen a little bit back since then, though. So, I'm in a couple plays. I have a PCS that expires tomorrow that we added today. If we go over to the callouts, we moved it to 43.90 before the FOMC minutes were released today. Been hedging quite a bit here. Had to roll some trades for debits. Been covering with the hedges. Collected a nice $1.05 on the last two trades. So been pretty decent here as well. Here's our opens trade tab. You can see all the hedges, all of our fills on this guy. Pretty simple, straightforward strategy. One thing I did want to mention before we get into the checklist, I'm running a 6-month deal. If you sign up for 6 months in the group, I'll give you 33% off whatever your sign-up price was. So that's my biggest deal, and this will probably be my last one until about October if you've always considered joining the group, seeing what we're about. So I just wanted to say that out of the gate. There's an email below. You can message me or also just join the group, and then I can prorate it based on the launch pass link. But if we'd go into the expected move math as we kind of look at the S&P and the VIX today, expected move chart, I've been using this for the majority of the trades we've been taking. I've been making sure we're outside of the expected move for almost every single trade. And it looks like today as well, we'll be outside of the expected move for tomorrow as we have unemployment claims coming out very soon as well. That may shake up the market. We're on week 3 of red, which, we all knew it was overdue for pulling back. That's just part of how it goes. That's just part of trading. That's just part of the stock market. I know a lot of people have been getting frustrated with the price action because they're only used to green, but these setups have been very solid for any sort of bearish movement. And that's why I've been putting on a lot of call credit spreads for the last few weeks. And it's just mean reversion at the end of the day. Look at how fast the S&P went up over the last 6 months. Like, you're eventually going to have some time where it downturns for a bit. And, 150 points is pretty decent. The other thing, too, is I think we're going to lose 4,400. But of course, my job is not to predict price action. But if that's the case, then we could really start moving down to 4,200 again. I'm not out here trying to fearmonger or anything. That's never my job. You guys know me as a trader. But, it's something to keep in mind that the momentum could continue down. It's been 18 months since we made a new high in the S&P. So, we also might be on the track to do that, which is very uncommon if you look at the 5-year history of the market. Generally, we bounce back pretty quick or continue to achieve new highs, even through the max of the stock market too. So very curious to see what we're going to do from here. But overall, like I said, that expected move math, did we gap up or gap down? The recent trades I've been taking. And this, knowing that these gaps act like magnets, and today's not a really good day to explain that or show that. But overall, the S&P generally will fill the gap in the same day. And it doesn't always happen. Even if it doesn't, we've had these open gaps. If you guys remember, we had those gap ups back here, that Tuesday into Wednesday, and we finally came down and filled it. So that's another thing to keep in mind of. Another reason why I wanted to be bearish for the last few weeks is because we've had that open gap in this area since early July, and it's already mid-August now. So just having that situational market awareness will really help you make your decisions and put yourself in a really solid trade spot for taking positions, adding to trades, knowing how much risk you should put on. Where's the VIX? We talked about the VIX. The VIX actually really hasn't risen as much as I anticipated it from where we're at now. The VIX overall, generally, I would expect it to be a little bit higher with how much selling we've seen. But overall, it's still quite an increase, I would say. Yeah, I know it's down over the last 6 months, but throughout June and July, it was down to 13, 14, where the premium just sucks. That's the only way to say it. And the moves are very small every day. So that's another reason why I would like a bigger move down, because then the VIX is more likely to increase. And when the VIX increases, the premiums increase. So it just makes trading a little bit more fun when you're like selling credit spreads and selling options contracts. So market's kind of hovering 44.30. Like I said, watch out for these two ES levels over the rest of the week. 4,400 should be a pretty major test if we get down there, and I would expect us to bounce from there, but that's still 30 points away from where we are now. 3 to 5 days of red or green. We talk about this in the Discord a lot, which is this market likes to move in 3 to 5 day increments. If you look at the last month, right, generally it's like 1, 2, 3, 4, and then you get your relief bounce. 1, 2, 3, 4, relief bounce. 1, 2 on days of red, and it's same for the green side, right? 1, 2, 3, 4, and then the other way around. So you'll kind of see that in the market where if you're following the trends and the expected move, you have a lot of these 3 to 5 day moves in one direction before you get some sort of counter move. And it might not even be that large of a counter move, but that's when you should expect to see it either pull back or pop back forward, depending on what the trend is overall. Where are our levels? We went over those. So those are the two levels I'm watching for the week. Position sizing, I do 6% of my account per trade when I first start it. I may move that down to 5% after get out of this next roll position, just so I can, help manage and keep my mindset a little better with how low the volatility is. So I'm thinking about doing that, still kind of hovering back and forth in my mind. Trade timing. I like to take my trades in the afternoon, but I have been managing them a little bit earlier based on if we have news in the afternoon, days of CPI or pre-CPI, where you never know what's going to happen the last hour of the day when CPI comes out the very next day. Choosing my strikes, I like to use, like I said, the expected move math, where I'm trying to put myself at least 1% away from a 1% down or up move, even when the VIX is this low, because the market likes to stay within those, and it does it 72% of the time just from an odd standpoint. So that's where you can really get nice like leverage, is knowing that this trade's already in your favor odds wise. So now it's just up to you to hedge and size properly, and then over time you'll end up coming out on top. So that's something else that's really cool. Risk management, we roll and then we also stop out of trades too here and there. The stops are more for like if we break a bigger level, but if you size properly, rolling should never be an issue, and also should never, you should never come into an issue with it unless you're oversized. If you're starting a trade with 20% of your account, good luck making decisions, right? And then we have our expectations here. We should know that every time we lose, you're probably going to give up 5 to 7 wins. And that's why we try to shoot for that 10% per every trade, the 8 to 10% return in general over time. And that's just through all the management. It might take you a month to do that. It might take 2 months to control that loss, but you can just trade around the roll as well, just so you don't get too over leveraged, right? And that's why it's important to not put too much money into one play. You'll get so emotionally attached to it. It happens to me. It would always happen to me where if I put too much money into a trade, like I would feel sick, like nauseous, like, why did I do this? Because the only person's fault is yourself. That's it. You're the one who controls your risk. You're the one pressing the buttons and clicking the trade. Like, that's the thing. You putting on the certain amount of contracts you put on, that's all on you. That comes down to how much risk you think you can handle. And then also if you're following the strategy to the T. But this has not changed at all. This has been the same strategy I've been running since last May/June time. We've just pivoted the time frames a little bit more to these more 1 to 3 days from this kind of 0 to 1 day. And that's just simply because of the VIX, but also these trends have been so much easier to identify over the last 6 months because of that 3 to 5 day information that we have. So that's going to be everything for me in this video. Like I said, if you guys haven't left a like yet, I'd really appreciate it. We're at 13,200 and some subs. It really is. I'm incredibly grateful for all of this opportunity. So I appreciate you guys for sticking around and listening and hearing what I have to say. We're going to advance in Halcyon on the channel soon, but that's going to be everything for me in this video, and I will see you guys in the next one.